real estate professional status is not an option, generally not an option for us as immigrants. So what do we do? Are we stuck or do we not have an option? We do have an option, especially with short-term rentals.
Hi, folks. Welcome to my episode on short-term rentals. I have with me an amazing guest, Karan Narang. We've known each other for quite some time, and I call him the king of short-term rentals because he is a beast when it comes to managing short-term rentals. Before we begin, of course, I want to say this, that whatever we talk about is kind of like two people talking and having fun and having a conversation about this. None of this is financial advice. None of this is legal advice. This is just for information purposes. So take it as it is, and let's have some fun. So let's bring Karan on. Hi, Karan. How are you?
Hey, Avishkar, I'm doing good. How about yourself?
I'm doing phenomenal, man. So let's just introduce you to my audience. Let's talk about you. What are you? Who are you? And what do you do?
So, Avishkar, I'm by profession up until now, I've been a consultant in the pharmaceutical supply chain space. But I'm excited to announce that thanks to our investment in short-term rentals, I think within the next 30 days, I will be retiring from my full-time job, the W-2 job that I'm on, and getting into my short-term rentals as a full-time. That's going to be my primary focus. Investments. My primary focus is going to be my family, my relationships, and thanks to short-term rentals, I'm able to do this now.
That's cool, man. That's cool. And it's important to kind of understand that your priorities are right. It's family first and then, everything else later. A lot of times, we sacrifice our family time and our lives for the jobs that we're doing. And I think that's why I started this podcast, so that I could help people understand what are the avenues available to them so that they could buy back their time.
Yeah, to be honest with you, again, I've been in the consulting space for almost 20 years. In the consulting space, I think this will to a lot of immigrants, right? When I first came to this country as an immigrant, I came here as an immigrant. Obviously came here to do my master's and started working at the same time and things like that. And I was a consultant. I was on a visa, which meant I had to travel. Monday to Thursday, I was on the road. And I've literally spent the last 20 years of my life traveling. The last 10 years of them have been focused on building a consulting business with someone I was working with. And, what I realized 20 years later is that did not focus on family and relationships as much as I should have. And if I don't make this drastic change now, I think I'll be making a mistake. So that's why I've decided, if you guys follow Tony Robbins, he says where focus goes, energy flows. And
right.
I've decided to refocus my time and my energy towards my family. So and luckily, because of short-term rentals, I'm able to make this switch.
So let's start, from when you just got started and you just got introduced to real estate. What really attracted you to this? I mean, traditionally, we all read about stocks. We come here, we have our 401ks, and we start investing in 401k, and we're like maxing out our 401ks, right? That's where everybody starts. Then people talk about, investing in mutual funds. But then what really got you interested in real estate?
Earning an extra dollar is a lot harder. I always thought I need to find a way to save money in taxes so that I can make that extra dollar go further. If I spend an hour working, harder, 40% of that hour is taken by the IRS. And I said, I need to find a way to keep all of that extra hour money because that's what I'm working hard for, right? And that was my initial motivation. Now, again, though I'm not... So I work in consulting, but over the years, because I started working for a startup, let's just say that, you would consider my wife and myself to be high income professionals, which means we had to try and find a way to save taxes. We're not doctors or anything else like that, but we had to find a way to save it. And what I started learning is that your W-2 job is the highest paid dollar you will ever earn. And
you mean the highest tax dollar
highest tax dollar you will ever earn. And, we sold our consulting company, that I was part of a startup, but I was still an employee, a W-2 employee. We sold that business about 2.5 years ago. And when we called it a liquidation event. So I got my share, my options cashed in. And when I saw that W-2 come through, or the W-2 for that, or that paycheck come through and the tax deduction on it, I said, never again. I said, never again. I'm never paying another penny in taxes. So that's what got me down this rabbit hole of trying to save on tax.
Interesting. Yeah, and I agree with you, man. I think the most expensive thing for me is taxes, and I would agree that for most of the high income earners who are W-2s, that's their biggest expense, so to say, from their paycheck. Like, and a lot of times when you're on W-2, you don't even see that money; it goes away directly, even
That's
before it
correct.
hits the bank. And that's sort of different from people who own businesses because they'll see the full amount and then they can leverage that amount to do whatever they want to do, unlike a W-2 income.
So people with businesses have the opportunity, the flexibility of the dollar. The US government by default gives you, if you're a business owner, the US government gives you the opportunity to save on taxes. They promote business. When you're an employee, they don't really care for you much, and you're going to be spending that money. Going to be paying those taxes, and there aren't those many tax breaks. The U.S. government also gives a lot of tax breaks, specifically for real estate. So it's
Yeah.
almost like there's an unfair advantage to being in real estate.
That's true. But I think there's so many flavors to real estate, right? All right. I personally prefer multifamily. What got you started in short-term rentals per se? How, I mean, and it's such a big space, right? Real estate is a huge space. How did you niche down to decide, okay, I'm going to do short-term rentals?
So what I found is, in my quest to try and find a way to save taxes, I started researching real estate. When we did that, I did take a course that spoke about multifamily. I think that's where you and I first met. And, and what I realized in that course is because I was a W-2 employee and my wife was a W-2 employee, we weren't in the state to actually go in and quit the jobs and follow what they call real estate professional status, which was absolutely mandatory in order to save taxes with multifamily. And my primary goal, my vision was to save taxes from my W-2 job. And in order to shelter those taxes, or shelter that income, I had to find a different way. So when I took that course on multifamily, I knew what I couldn't do. But I also learned a lot more about the short-term rental loophole. So
Right, right.
that's why I decided to pivot into that.
Okay. And so you decided to pivot into short-term rentals, but then how did you get to know about what to do in this space? Like when I started with multifamily, I didn't know anything about it.
So, what's funny is even before I took the course, I had heard about people investing in vacation rentals and saving taxes. So my quest to actually research this started, I want to say, has been 5 years now, right? 5 or 6 years. And I asked around a lot of people and I spoke to a lot of people. I actually spoke to people who are self-managing the properties. And I said, can you tell me how this helps you with taxes?
Right.
Either they did not want to share or they did not know because their CPA was doing his magic in the back end. And at that time, I had a CPA who didn't know much about the short-term rental loophole. And
Right.
I actually walked away from a really good deal on 38. 38 is one of the hottest markets right now. I don't know if you know the story, but I'll give you a brief about this.
Sure.
We're talking 2018 or 2019, maybe 2019 or something like that. And this was a property on 38, prime area of the country. It is, the property was worth, we had it on a contract for $975. I went to my CPA. He said I was crazy. He said, you're crazy. Don't even try to do this. I spoke to a couple of other people who manage on 38, who got properties on 30, and nobody wanted to share. These are my revenue numbers. This is how much I save in taxes. This is how I write off taxes. This is how I manage it myself. Nobody wanted to answer. And then when you look at numbers from a property manager, it was barely break even. I didn't have the money, to be honest with you. I didn't have the money to invest in any of this.
Right.
It was a stretch for me. I was trying real hard to put down $250,000 down payment on the property, right? So this, I spent all summer trying to figure out how do I make this deal happen. I pushed and finally, as we got to closing, the seller was pissed off because, we had to get extensions, we had to do all this stuff. He was mad. By the time we finally got clear to close, it had been 3 months. I'd spent all summer trying to figure this out because I knew in my heart this was a way for me to do something. And finally, I tell the seller, I say, hey, I will get there. I have to travel for work. Remember, this is where You work for someone else. It came in my way again. And I said, listen, I know we got the extensions and everything. I know we have the date till Monday or Tuesday or whatever, or something like that. I have to travel to Belgium for work. I'll be back in a week. We'll make it a good event. My wife's birthday, my kid's birthday. It'll be a fun thing. We'll do it next week. He says, nope, I will give you 24 hours to get down here and close. If not, I'm calling it breach of contract. At this point,
Oh,
everybody
wow.
had told me I was stupid. I was foolish. The CPA told me to walk away from it. The people who are managing didn't give me the answers I wanted. I hunted everywhere and I couldn't find an answer. And finally, I gave up and I told him, listen, you know what? Call it breach of contract. I'm not coming. Here's the fun part. My gut told me I had to do it. We walked away from the deal because I didn't believe in myself enough to stick with it. That property sold. It went back on the market, sold for $925. And 2 years later, it sold for $1.6 million.
Oh,
Okay.
wow.
So I have never again come across a property like that. So again, that was a 7-figure hit for me right there. And
Right.
then, when we had the liquidation event, that was actually another 6-figure hit for me on the taxes again. So I lost a lot of money through that, but it's a very expensive lesson learned. So I finally had to figure out a way, I thought I can't do this again.
So then what did you do?
So this is when, that's when I got back for about a couple of years. I decided enough is enough. I'm just going to focus on my job. I was so sick and tired of that. And that's when, I decided finally got back on it. I decided to go do this course. I realized I couldn't do it. And then I started digging deeper into short-term rentals. The thing is, short-term rentals still didn't have a course, but I knew enough bits and pieces to actually put this together. And it actually worked out pretty well. So since then, we have invested in several short-term rentals. We have a pretty large portfolio at this point. We have 4 operational, one's being rehabbed as we speak, and we've got 3 more being built right now. Last year, I have to say, I was probably one of my highest earning years, and I actually got a refund of $80,000. That was a win, right? And we carried over losses for this year as well. So it's been a great experience. We've gone forward and invested, and I still had to piece together a lot of this. In the last 24 months, I would say there have been new courses come up and new avenues to learn. And I didn't have any of this when I first started, but I'm glad to see that a lot of that has come about now.
No, that's interesting because I think knowledge is very key before you start in real estate. From the outside, you look at these numbers and you get wowed. You're like, wow, this is phenomenal. And this probably is easy. How hard can it be? You just go and you put in a tenant there and you make money. But there are so many moving parts to it. All right, guys, if you haven't done already, please go check out my free video series on how to do due diligence on operators and on deals before investing in them. It's called Real Estate RX for Passive Investors, and it's available at www.rerxcourse.com. For example, we're talking about this tax break and the short-term rental loophole. Karan, do you want to go into that a little bit and just kind of explain what these tax breaks really mean when it comes to real estate?
So the whole concept of tax breaks on real estate, I mean, it is actually a pretty in-depth topic, right? That
Sure
deserves its own
let's
time.
just give you a brief overview. Yeah, exactly. This is not a video course, so this is just a brief overview of what exactly does it mean about a tax break? Like, we're taxed right up front, but what happens if you buy real estate?
So what happens is, in real estate, you have 2 avenues, right? I mean, you've got several places to save tax. Okay. When you are in real estate, there's a key criteria that everyone goes after. It's what they call real estate professional status. If your primary occupation, right? Let's say you're not a doctor or a consultant or something else, and you're spending at least 750 hours a year in real estate and doing nothing else. That's your main job. That's how you earn your money. You can claim real estate professional status. Now, again, keeping the theme with the immigrants that we're talking about here, possibility, a lot of people are on visas and W-2s and H-1s and stuff like that. Almost impossible for you to quit your W-2 job, focus on real estate professional status, because it has to be a primary occupation. And in real estate, again, you can't go to a realtor and say, hey, sponsor my H-1 visa. That's not happening. They won't do it. There's plenty. They don't have the need for that. So you're going to have to keep your job. So real estate professional status requires it to be a primary occupation, and 750 hours or more a year spent in it. And you can't be doing anything else for more time. So for immigrants, generally, that's not an option. But what happens is if you're able to do that, then you get other tax breaks. And some couple of the keywords to be mentioned here, and people can go research themselves as well if they want, is what you call accelerated depreciation and cost segregation. So what happens is, due to some recent tax law changes, you're able to accelerate depreciation. Depreciation is a factor, when you have an asset, you are able to depreciate it over a period of time. It's the number of the usable life that it has.
So just to clarify, this depreciation is actually a phantom depreciation that the IRS
Correct.
actually, it's not just it allows, it mandates that you take that depreciation over the course of the whole, over a course of a certain number of years. I don't think we need to go into the details of that because that becomes another very, nuanced topic that we can discuss and, go into that rabbit hole. But I don't think we need to go there. But just to give a brief overview, that's what happens. So they say that your IRS basically says that you are actually, your value of your asset is actually depreciating in the eyes of the IRS. So you need to take this tax break because of that. Even though the asset may be appreciating in value because of the demand and whatever's happening in the market, it still means that you take that tax write-off. And so I think the other important thing is that it's a business. Everything is a business. So whatever expenses you're putting in, you will get a business, because it's a business expense. You're going to get a tax write-off for the business expense as well.
Yeah, and I think, the big part, what I personally don't believe in is that you expense 40%, 40 cents to, on it to save, or you expense $1 to save 40 cents. Right? So I don't believe in that concept, but, and I usually don't go for the smaller expense write-offs and all that. It's too much headache for me. I'd rather go for the big numbers. Now, again, I also mentioned that real estate professional status is not an option, generally not an option for us as immigrants.
Right.
So what do? Are we stuck, or do we not have an option? We do have an option, especially with short-term rentals. That's where I found that's a loophole I found, because I was still wanting to, even though I'm a U.S. citizen now, I still had to find a way to write off my taxes. And the loophole is the short-term rental loophole, which is, as long as you have a property that you self-manage, at least in the first year, and self-manage can be defined better, but it's something that you don't hire a property manager for. That's the easy way to say it. You do not hire a property manager for, and the average length of stay, the IRS says that as long as the average length of stay, so let's say, I go and stay in an Airbnb property or a short-term rental, as long as I stay for an average of 7 days or less, it qualifies as a short-term rental. Because for long-term rentals, what happens for multifamily is you sign a lease, a year later you sign a new lease. And yes, there might be some management, some maintenance and all that.
Sure.
But you're not really actively working in it, right? You may have 4 calls a month or whatever, but after that, you're not actively working. The amount of work that you put in with a short-term rental is a little more. So the IRS says, as long as the average length of stay is 7 days or less, and you self-manage the property, and there's several ways to qualify for that. There's a number of different hours. It gets very complicated there. But once you get there, you are able to write that off against your W-2 income. The highest taxed dollars you will be able to write off. And especially if you're a high income earner, you're writing off at 30 and 40%. That's a huge tax break. That's why, for me, short-term rentals and real estate is the right way for me, because there's a few benefits to short-term rentals, right? Cash flow is huge. You earn a lot more every month. Your bank account, you see a lot more money come in. Versus multifamily has pros and cons. So the cash flow is bigger with short-term rental. The tax benefits, especially for immigrants, when you're on a visa and stuff like that, or you need to keep a W-2 job for whatever reason, is huge. You can still write it off. And the third one is the property is still going to appreciate like real estate does. So you've got the tax write-off, the cash flow, and the appreciation. Yes, they're a little more riskier because everyone has this concept of, what happens if the economy tanks and stuff like that. But they've been saying that every year for a long time, and it might happen. Listen, don't get me wrong, it might happen. But the fact that this investment is backed by a real asset, as long as you buy it right, you'll be okay.
Yeah, no, that's true. And I just want to remind our listeners that, even though we're talking about these tax breaks and, the short-term rental loophole, what the IRS does, we're not attorneys. This is
Yep.
what we've seen in our experience. So and we're not CPAs. So, whatever you do, make sure you're talking to your CPAs. Don't take our word for it. Hey, what do we know? Don't take our word for it. Just make sure that you talk to the right people
For
who
sure.
can guide you in the right way. This is what we have seen in our experience. And, but even we talk to our CPAs and our, attorneys before we take any steps so that we're not doing something that's against the law and then we end up in a soup.
Absolutely. This is just a conversation between two friends, and we're happy to share.
So, folks, stick around for part 2 of this interesting conversation that I'm having with Karan. We'll be dropping in some more nuggets. Hopefully, Karan will do that for you guys so that you understand how this short-term rental space works. Well, thank you so much for joining me, and we'll see you in part 2.